Yeah, I think it's the projected loss, the 700 billion. I mean, it looks very, very big, but actually, it's in the nature of things. You consider the typically a severely adverse stress scenario would come at $430 billion. So I think also considering all that's going on, and considering also the fact that this crisis, it is not only confined to a few sectors, but it has range from consumer to small business to the hospitality and the commercial real estate. I think is quite widespread. So it's not surprising the Fed it's asking the banks to a bit of reprieve in terms of dividend and share buybacks. By the way, also, not a single bank in the US was thinking about increasing the dividend in the short to medium term.
Let's get into those implications of a cap on the dividends and the share buybacks now being stopped. I think many investors have been closely watching the dividend story, and you've seen cuts everywhere. But this is one of the decent payers on the S&P 500. And when it comes to the share buybacks, it seems to be the way much of the money is distributed from the lenders. So how significant is it for investors in US banks?
I think it's significant in the sense that if you take, say, over the last 2 to 3 years, if you look at the increase in the EPS of a single stock level, that's mostly been driven by the denominator, i.e. the number of shares being reduced because of those important share buybacks. But of course, I mean, so we all know this kind of mechanism is the first one to go in difficult situation like the times we're living on. So I think it only makes sense to pause the share buybacks and also cap the dividend. By the way, also the American banks are still paying the coupon on the preferred shares, so that's I think is a more, if you want, a pragmatic way to approach things versus some other regulator around the world.
I think many are trying to wonder or guess when the share buybacks might be resumed. And at this stage, we know many of the banks will now have to file quarterly paperwork, which suggests maybe there is a bridge to returning in the fourth quarter. What are your expectations? Do you think that this year is a complete write-off, or will we see a little bit of light at the end of the tunnel in the fourth quarter on those buybacks?
I think the answer is in the consumer finance, which if you look at the data of the expected losses, I believe $144 billion is coming from consumer finance, which is actually quite huge. It's actually the big difference between European and American banks. European banks, they're not that involved in consumer finance as their American peers. I think also if the unemployment rate stabilize and even come back from now into, say, Q3, Q4, then maybe it's not completely out, at least I would say maybe for the dividend. I think share buybacks, it will be more an issue for 2021.